Something unprecedented is happening in the British property market right now, and if you're a tenant, you need to pay attention. Landlords are abandoning their rental properties at a rate we haven't seen in decades, and while that might sound like good news, it's actually about to make your life significantly more expensive. The numbers tell a story that most people aren't seeing yet, but once you understand what's really going on, you'll realise why your next rent increase might be bigger than anything you've experienced before. Right now, in Britain, private landlords are selling up and getting out of the rental market faster than ever before. These aren't just small-time investors getting cold feet. We're talking about experienced property owners who have been in the game for years, suddenly deciding enough is enough. Recent data shows that landlord exodus has reached levels that economists are calling alarming, with thousands of rental properties being pulled from the market every single month. The buy-to-let sector that once seemed like a guaranteed moneymaker has become something many landlords now see as more trouble than it's worth. The reasons behind this mass departure are stacking up in ways that make it almost impossible for landlords to stay profitable. First, there's the tax changes that have been hammering by to let investors for years now. The government has been systematically removing tax reliefs that landlords used to rely on, particularly the ability to deduct mortgage interest from rental income before paying tax. This change alone has pushed many landlords from making a decent profit to barely breaking even, or in some cases, actually losing money every month. Then there's the additional stamp duty surcharge that makes buying investment properties significantly more expensive than it used to be, adding thousands of pounds to the upfront cost of acquiring rental homes. But the financial pressures are only part of the story. Landlords are also facing a regulatory tsunami that shows no signs of slowing down. The government has introduced wave after wave of new regulations covering everything from energy efficiency standards to electrical safety checks, from carbon monoxide detectors to mandatory licensing schemes. Each new rule comes with compliance costs and the threat of hefty fines if anything goes wrong. Many landlords report feeling like they're running a highly regulated business with all the headaches that come with it, but without the profit margins to justify the stress and risk. Energy performance certificate requirements have become particularly contentious. Properties now need to meet minimum energy efficiency standards, and those standards are set to become even stricter in the coming years. For landlords with older properties, this means facing renovation bills that can easily run into tens of thousands of pounds. Some properties, particularly older Victorian and Edwardian homes that make up a huge chunk of Britain's rental stock, are extremely difficult and expensive to upgrade to the required standards. Many landlords are looking at these costs and deciding it's simply not worth it anymore. Then there's the issue that really pushed many landlords over the edge: tenant rights reforms. The government has been steadily shifting the balance of power toward tenants, with proposals to ban Section 21 no-fault evictions and make it much harder for landlords to regain possession of their properties even when things go wrong. While these reforms are designed to give renters more security, they've had the unintended effect of making landlords feel increasingly vulnerable. The horror stories circulate constantly in landlord circles, tales of problem tenants who stop paying rent and then take months or even years to evict through the courts, while the landlord continues to pay the mortgage and gets nothing in return. The fear of getting stuck with a nightmare tenant who can't be removed has become a major factor in the decision to sell up and get out. Interest rate rises have delivered another crushing blow. For years, landlords enjoyed ultra-low mortgage rates that made buy-to-let investments look attractive. But as the Bank of England has pushed rates higher, mortgage costs have soared. Many landlords who were making comfortable profits when their mortgage rate was under 2% are now seeing rates of 5% or more. That difference can completely wipe out rental yields, turning a profitable investment into a financial drain. Landlords who need to remortgage are facing payment increases of hundreds of pounds per month, and many are deciding they'd rather cash out while property values are still relatively high than continue bleeding money. Insurance costs have quietly become another major headache. Landlord insurance premiums have been climbing steadily as insurers respond to increased claims and growing regulatory risks. Some landlords report their insurance costs doubling or even tripling in just a few years. Combined with increased maintenance costs, management fees if they use letting agents, and all the compliance expenses, the actual profit left over at the end of the year has shrunk to levels that many landlords consider not worth the hassle. So what does all this mean for you as a renter? This is where things get really concerning. Every landlord who sells up and leaves the market removes a rental property from the available pool. When those properties are sold, they're usually bought by owner-occupiers, or occasionally by developers who convert them into something else. Either way, that's one less rental home available for tenants who need it. As the supply of rental properties shrinks while demand remains high or even increases, basic economics tells us exactly what happens next. Rents go up, and they go up significantly. We're already seeing this play out in real time across the UK. Rental price growth has been accelerating at rates that are outpacing wage growth by considerable margins. In many cities, renters are facing increases of 10, 15 or even 20% when they renew their tenancies or search for new homes. These aren't small adjustments for inflation. These are substantial hikes that are forcing many people to make difficult choices about their living situations. Some are being pushed into house shares when they wanted to live alone. Others are having to move further from their jobs to find something affordable. And an increasing number are finding themselves priced out of entire areas they used to call home. The situation is particularly acute in certain regions. University cities are seeing extreme rental shortages as student accommodation competes with regular rental demand and landlords continue to exit. Young professionals in places like Brighton, Bristol and Edinburgh are reporting nightmare searches where dozens of people show up to view every available property, and bidding wars push rents even higher than the ally. Inflated asking prices. London has its own unique pressures, with rents in the capital reaching levels that seem divorced from any reasonable relationship to average incomes. What makes this crisis different from previous rental market squeezes is that there's no relief valve in sight. Normally, when rents rise significantly, it encourages new landlords to enter the market or existing landlords to expand their portfolios drawn by the prospect of higher returns. But that's not happening this time because all the factors pushing landlords out, the taxes, the regulations, the risks, are still there, getting worse, not better. The government shows no signs of reversing course on its landlord policies. If anything, the rhetoric from politicians suggests more regulation and more restrictions are coming, not fewer. The build-to-rent sector, where large companies build and manage purpose-built rental developments, is growing, but nowhere near fast enough to replace the lost supply from departing private landlords. These large-scale developments also tend to focus on city centres and charge premium rents that put them out of reach for many ordinary renters. They're not providing homes for the teaching assistants, the retail workers, the junior nurses, and the other moderate income earners who are being squeezed out of the private rental market. Some experts argue this is all part of a deliberate strategy to shrink the private rental sector and push more people toward home ownership. But that argument falls apart when you look at the reality facing most renters. If you're spending an ever-increasing share of your income on rent, that leaves less money to save for a deposit. As rents rise faster than wages, the dream of home ownership actually moves further away for many people, not closer. The shortage of rental properties doesn't push people onto the housing ladder. It traps them in an increasingly expensive rental market with diminishing security and fewer choices. The knock-on effects are spreading through the economy in ways that aren't immediately obvious. Young people are delaying starting families because they can't find stable, affordable housing. Workers are turning down job opportunities because they can't find anywhere to live in the area. The flexibility that a healthy rental market should provide, the ability to move for work, to relocate for opportunities, to adjust your living situation as your life changes, is disappearing. People are staying in unsuitable homes because they know if they give up their current tenancy, they might not find anything else they can afford. There's also a growing divide between existing tenants and new renters. If you've been in your rental for several years, your landlord might be giving you modest rent increases, or even keeping rent the same, especially if they're happy with reliable tenants and want to avoid the hassle of turnover. But if you need to move, or you're entering the rental market for the first time, you're facing current market rates, which can be 30, 40, or even 50% higher than what people in similar properties have been paying for years. This creates a strange situation where your friend in a similar flat might be paying hundreds of pounds less per month simply because they've been there longer. landlords who remain in the market are becoming much more selective about their tenants. When you have 50 applications for every property, you can afford to be picky. Landlords are increasingly looking for the perfect tenant, high income, excellent credit history, good references, no pets, no children. If you don't tick every box, you're going to struggle. This is particularly hard on people who already face discrimination in the housing market, whether that's single parents, people on benefits, or anyone whose circumstances don't fit the ideal tenant profile that landlords are now holding out for. The competition for rental properties has become so intense that it's changing how people search for homes. Renters report having to drop everything to view properties within hours of them being listed, because if you wait until the next day, it will already be gone. Some are offering to pay 6 months or even a year's rent up front just to make their application more attractive. Others are offering to pay above the asking rent to beat out competing applicants. These tactics might work for individual renters, but they're pushing the market in directions that make things worse for everyone collectively. When some people start offering above asking rent, it raises the floor for what everyone else will have to pay. Looking at the data on landlord numbers makes the scale of this exodus clear. The National Residential Landlords Association has reported that a significant percentage of landlords plan to reduce their portfolio in the next few years. Some surveys suggest that more landlords plan to sell properties than plan to buy them, which means the net direction is firmly towards shrinkage, not growth. Even landlords who aren't selling report that they're much less likely to expand their holdings than they were 5 or 10 years ago. The entrepreneurial spirit that once drove people to buy to let portfolios has been thoroughly dampened. The really worrying part is how this compounds with other housing challenges Britain is facing. The country already wasn't building enough homes to meet demand, and the homes being built often aren't the right type or in the right places. Social housing stocks have been declining for decades, and waiting lists have grown to the point where they're essentially closed in many areas. Home ownership has become increasingly difficult for people without family help for deposits. The private rental sector was supposed to be the flexible option that filled the gaps, but as it shrinks and becomes more expensive, it's failing to serve that function. Some landlords are converting their properties to short-term holiday lets, instead of selling, which removes homes from the permanent rental market, while keeping them as income-generating assets for the owners. This is particularly prevalent in tourist areas and beauty spots where a property on Airbnb might generate more income than a traditional tenancy. But this trend means fewer homes for local workers in exactly the areas where housing is often already scarce and expensive. Entire communities in places like Cornwall, the Lake District, and the Scottish Highlands are being hollowed out as rental properties become holiday cottages. Political responses to this crisis have been frustratingly inadequate. Politicians across the spectrum acknowledge that housing is a major issue, but the proposed solutions rarely address the fundamental mismatch between supply and demand. There's lots of talk about building more homes, but the reality is that planning systems, construction capacity, and political opposition to new development mean that building at the necessary scale is incredibly difficult. Meanwhile, the policies that are pushing landlords out of the market continue largely unabated, because changing course would be politically awkward and would anger tenant advocacy groups who see landlords as the enemy rather than as providers of a necessary service. The generational implications are profound. Millennials and Gen Z are facing a housing market that looks nothing like what their parents experienced. The traditional path of renting for a few years while you save for a house deposit has been replaced by a reality where many people will rent for most or all of their adult lives while watching rents consume an ever larger share of their income. The wealth gap between those who own property and those who don't is becoming a chasm, and your housing tenure is increasingly the main determinant of your long-term financial security. If your parents can help you buy a home, you'll probably be fine. But if you're dependent on the rental market, your prospects for building wealth are drastically diminished. International comparisons offer little comfort. Britain's peculiar combination of factors, the tax treatment of landlords, the extremely high transaction costs of buying property, the sclerotic planning system, the decline of social housing, creates a perfect storm that few other countries replicate exactly. Some European countries have much larger social housing sectors that provide stability. Some have more landlord-friendly regulations that keep the private rental market functioning. Some have less restrictive planning that allows supply to better meet demand. Britain seems to have managed to combine some of the worst elements of different systems while avoiding many of the better aspects. For individual renters trying to navigate this market, the advice is frustratingly limited. You can try to be the perfect tenant to convince your current landlord to keep rent increases modest. You can search further afield to find cheaper areas, though that often means longer commutes and being further from jobs and opportunities. You can house share to split costs, though that's not a sustainable solution for everyone, especially families or older adults. You can try to scrape together a deposit to buy, though that's increasingly unrealistic for most people. None of these are solutions, they're just survival strategies in a fundamentally broken market. The longer-term trajectory looks even more challenging, as the remaining landlords realise they're operating in a supply-constrained market with desperate tenants competing for limited properties. What incentive do they have to keep rents affordable? The market dynamics push strongly toward continued rent increases until they hit whatever ceiling represents the absolute maximum that tenants can possibly pay, even if that means spending 50, 60 or 70% of their income on housing. There's no natural mechanism that will bring rents back down to reasonable levels relative to incomes. Only a massive increase in supply could do that, and there's no sign that's coming anytime soon. If you're watching this as someone currently renting or planning to enter the rental market soon, the reality is you need to prepare for a significantly more expensive and competitive market than existed just a few years ago. Your rent is likely to increase substantially, whether through rises from your current landlord or through having to pay higher rates when you move. Your choices will be more limited and your security less certain. The flexibility and freedom that renting is supposed to provide will continue to erode as landlords become more cautious and demanding, and as competition for properties intensifies. The landlord exodus isn't slowing down. All the pressures pushing them out remain in place, and, in many cases, are intensifying. Every month, more properties leave the rental market, and every departure pushes rents a little higher for everyone else. This isn't a temporary blip that will correct itself. It's a fundamental restructuring of the rental market in ways that heavily favour property owners over tenants. Unless something dramatic changes in government policy or economic conditions, the rental crisis will continue to deepen and your rent will continue to climb. That's the uncomfortable truth that too few people are talking about clearly. The private rental market as we've known it is disappearing, and what's replacing it is smaller, more expensive, and far less accessible to ordinary people. The question isn't whether your rent will increase, but by how much, and whether you'll even be able to find an affordable place at all.